Hello, everybody. Yes. So thanks to the organizers of the event who give me the opportunity to express a few ideas about the economic aspects or some of the economic aspects of Bitcoins. I will start with a technical and statistical description of what Bitcoins are. If the next slide gets on. Yes, thank you. So let me first start with a technical and statistical description of this new phenomenon. And then I will move on to an analysis of the economic aspects of production and use of Bitcoins, at least some of the economic aspects, if not all. And against this background, I will try to draw some insights as to the most likely future response from governments. So where do Bitcoins come from? Bitcoins come from a cryptology research paper which was published in 2008 by a certain Satoshi Nakamoto, who until today remains unknown still, and is believed to be a pen name for a group of cryptologists coming from a CryptoPunk community, clearly with anti-establishment leakings, sympathetic to leftist anarchist ideas. And the concept of Bitcoins was to basically revolt a little bit against fiat state-run paper currencies, which allowed for the bailouts, as you might remember, in 2008, 2009, and also a kind of revolt against the traditional commercial banks and financial industry. Satoshi Nakamoto and the people behind had two main ideas. The first two main goals. The first one was to create a non-inflationary currency with decentralized production, very different from the paper currencies that we live with nowadays, which are produced by a central authority, and that central authority decides how much money to produce and basically how to distribute it, who will be the first receivers of any increase in the money supply. That is not the case with Bitcoins. And second, the second goal was to get rid of the third party, the trusted third party, in the certification of electronic payments. And two innovations came out of this project, each of them addressing the two goals. The first innovation was really to design a virtual money that is a non-material base money. I will come back to this concept, which still has a positive and marginally increasing cost of production, very much like a commodity money. And this is a term to which I will come back. So this is really a novelty. And the second novelty was to create a kind of public ledger of all past transactions with Bitcoins, public ledger that is fully transparent, replicated on the computers of all users, confirmed on a peer-to-peer basis, and this public ledger basically solves the issue of the double spending for which we need a trusted third party. Now, production of Bitcoin started in 2009, and use of Bitcoins really picked up in the course of last year. And thanks to very low barrier to entry, a very large number of rival cryptocurrencies have appeared, Litecoins, Peer coins, Dogecoins, and so on. And it's basically at least 100 are listed on coinmarketcap.com. What are the main features of Bitcoins? The overall supply of Bitcoins and the way we are transacting with them, or those who are transacting with them, the rules of the transactions and the rules of production are predetermined. And basically, the blocks are being added to this public ledger with all transactions, which is called a blockchain. Blocks must be discovered, and energy, computer power, cooling systems, heavy investments in hardware are needed in order to discover these blocks. The discovery process of these blocks is tantamount, is equivalent to solving ever-increasing in difficulty mathematical problems. And the people who invest in this hardware are called miners, very much from an analogy with the production of gold. That's why bitcoins have been called the internet gold by some people. Now, this work of discovering new blocks to the blockchain, to the public ledger, basically this work of certifying the public ledger, is rewarded with bitcoins. 50 bitcoins per block in the first 4 years of their existence, currently 25 because we are now already in the 50th year of the existence of bitcoins, and then every 4 years the reward per block is halved. Total bitcoin supply, because the rules are, according to the existing rules, which are predetermined, total bitcoin supply is kept at 21 million of units. And this amount is calculated to be reached somewhere in the year 2140. Each Bitcoin is divisible up to 8 decimals, which implies that you can transact with very small parts of Bitcoins. And Bitcoins are kept in wallets, which are identified by addresses. And what does it mean to spend bitcoins or to make a bitcoin transaction? It means to transfer bitcoins from one wallet to another. And this transaction is being added to the public ledger, the blockchain. This makes it fully transparent because the blockchain is verified by the miners, and basically one block is added every 10 minutes. And as any new transaction must be part of a new block, it means that your transaction is verified within the next 10 minutes. And this public ledger, again, is shared by all users in the sense that it is fully replicated. This implies also an element of irreversibility, which might have a positive side. Until now, only the negative side has been voiced out. Namely, if the transaction is irreversible, what if the seller of the product appears to be a fraudulent person? There is obviously a consumer protection issue there because you cannot undo the transfer. You must do another transfer, basically. Now, something very important to which I will come back, the verification of the blockchain, of the public ledger, the certification of the public ledger does not require unanimity of all people. It only requires majority of computer power, and that's a key element. Now, so much for the broad description. What are the latest statistics? As of the 19th of February, a little bit more than 60% of the total possible amount of bitcoins have been produced already. Daily, there are 65,000 transactions. We have observed a very strong price appreciation in the price of bitcoins in terms of dollars. It was valued at around, it was exchanged at around $1 in the early 2011. Then it went up to 1,200 in December last year, and currently it's around $500 per Bitcoin. So very volatile. The latest market capitalization, just to get an idea of how large is the stock of Bitcoins, we can refer to the notion of market cap, so to speak. It is just below 6 billion currently. As of the 19th of February, it was 7 billion. And this represents something like 0.5% of US dollar currency in circulation, US dollar banknotes. And if we compare this to the US dollar base money, that is currency in circulation and commercial banks' reserves at the Federal Reserve System, this is something like 0.15%. Users of My Wallet, which is a website providing storage of wallets services, users of My Wallet have gone up to about 1,300,000 lately. And coinmap.org, which is tracking the extent to which bitcoins are used in transactions, showed a significant increase in the venues accepting bitcoins from 300 in mid-September 2013 to around 3,300 lately. And bitcoins are traded for the well-known fiat paper currencies on digital exchange, digital currency exchanges, the infamous empty GOX was part of these exchanges. And daily volumes, daily exchanges of bitcoins for dollars were in the range of 20, 30 million per day. The amounts in euros are much less significant, and in pounds almost inexistent. Now, the biggest contribution from me, so to speak, to this forum would be to give you a framework in which to conceptualize about bitcoins. How shall we understand bitcoins? So we need to go back to some fundamental economic concepts which will allow us to understand what is the nature of this new monetary object. And in economic theory, we make a distinction between commodity money, think of silver and gold, and fiat monies. And these two monies are completely different in nature. Commodity monies first appeared out of voluntary transactions from the market through a spontaneous process which identified one of the most liquid commodity as a medium of exchange. People understood that rather than exchanging carrots for potatoes, which creates an obvious problem of coincidence of double wants, of symmetrical needs, it might be much easier to use a medium of exchange which will be demanded just in order to be held and then exchanged for the goods that we really are looking for on the market. That's how money appeared, out of a pre-existing commodity. Very important, commodity monies have a parallel non-monetary demand. In industry, or even if gold and silver are outpaced by a new invention in their industrial use, we will still use them at least for beautification services, so to speak. So there is a parallel non-monetary demand. And increases in the money supply are extremely costly, and the cost of producing commodity money is determined by the general market-driven price mechanism. In order to increase the supply of silver and gold, you must attract factors of production, capital, labor, from other sectors. And the way we attract factors of production is by bidding up their price. In order to increase the money supply of a commodity money, you need an investor who will put a lot of money. So it's extremely costly. And this cost is determined by the general competition process in the market. With fiat monies, it's completely different. So fiat paper monies, historically, they came from what we can call what historians call a protected devolution of banknotes by a legally sponsored, by a legalized suspension of the convertibility of banknotes into gold, basically, into commodity money. So it's not a market process. Fiat paper monies also enjoy legal tender status, which means that we cannot refuse them against exchanges unless we accept to get some legal penalty. And even most importantly, changes in the money supply are administratively decided. There is a central authority which decides how much money to produce according to Friedman rule or something else, and the cost of production is practically zero. It is enough to add another zero on any single banknote, and the total money supply at zero cost is just multiplied by 10. So this is something which is possible with paper currencies. Now, in order to fully understand bitcoins, we must go a step further, and there is a second distinction which we make in economic or monetary theory. Second distinction, in order to fully grasp all possible monetary objects, we distinguish between base money and monetary substitutes. Base money is valued for itself, and base money can be either the commodity money or the fiat paper money, which I just discussed. But we can use also as medium of exchange titles on base money. Not gold, not paper banknotes, not euros, but a title either on a stock of gold in a bank or on a stock of euros in a bank. These titles are called monetary substitutes, and they are either full-fledged certificates, if 100% covered by reserves, commodity or paper, or fiduciary media of exchange if they are partially covered. And nowadays, bank deposits are a fiduciary media of exchange. Now, where do bitcoins fall into these categories? The first thing to notice is that virtual media of exchange have a very long existence. Deposits nowadays are virtual media of exchange. So the virtual aspect of bitcoins per se is not a novelty. The novelty of bitcoins is that it is a virtual base money with a production process that mimics the production process of a commodity money. This is very different from the Linden dollars of Second Life, if you have followed this. So it's a very specific virtual money. And it avoids the need for a trusted third party by creating this public ledger. And this is the Bitcoin specificity, a virtual base money. And this is what we must analyze in order to see what are the future prospects of development. Let me first raise a controversial question. How virtual could a virtual base money be? And my point here is that proof and transfer of ownership both imply recourse to material goods. We need electronic hardware, we need electricity, we need software. And virtual base money cannot exist without investing into these complementary goods. It is not a finished good in the way a Krugerrand is. So it does not have an independent existence. It needs, if not to be permanently produced, at least permanently sustained. And the owner of bitcoins does not have full control. And this is exactly what we saw with Mt. Gox. And this is a fundamental flaw, so to speak, in an anti-establishment project. Now, what are the disadvantages and benefits from, if you can move to the next slide. Somehow it doesn't move. Okay, yeah. What are the disadvantages and benefits from this monetary distinction categorization that I made? Well, there are clear disadvantages relative to standard commodity monies. First of all, there is a lack of full control. Second, there is a dependence on a specific technological development. You need servers, a lot of electricity, cooling systems. This is really a technological development which, first of all, is not a given. It must be sustained every single day as a structure of production, which might disappear one day and which does not exist in some countries. And then, as a virtual money, Bitcoin suffers from a lack of non-monetary demand. And this is another big problem because it makes it prone to hyperinflations. Now, hyperinflation is a situation in which not only the supply of money increases, but the demand for money collapses. This can never happen with a commodity money because there is always a parallel demand which is there, which acts as a floor to the demand for money. With any virtual money, demand can disappear because there is no alternative use. And to some extent, this is basically also what we are seeing currently in the significant price decline of bitcoins. Now, this being said, there are clear benefits also to present-day fiat paper monies. There can be no swings in the money supply because the rule according to which money increases are given. There are very low transaction costs, currently at least. And bitcoins clearly have also some attractiveness as an investment vehicle. Now, the benefits, as far as I see it, might be temporary. There are technical reasons to believe that the cost of transacting with bitcoins will increase. And there is a second big issue. The rules built into the algorithm can be changed by a majority of computer power. Now, this implies that based on a democratic agreement in the future, the miners could agree to begin expanding the money supply very much like with fiat paper monies. There is another point that I wanted to make, but we are short of time. Is Bitcoin a money already? The main issue is that the transaction with a new medium of exchange is always roundabout and cumbersome at the beginning. Bitcoins are not yet used for economic calculation. No wages, no rents, no costs of production are calculated and accounted for in Bitcoins. This is key in order to possess the monetary aspect for a currency. And the introduction of a new money always implies, of a new medium of exchange, always implies some roundaboutness. And in order to accept this roundaboutness, one must be extremely dissatisfied with the existing money. This is when we typically, these are the situations when we see new monies being introduced, situations of hyperinflation, when the existing money does not provide the services that we expect from it. And at that time, it becomes meaningful to accept the cumbersomeness, which is very close to a barter system of using a new medium of exchange. The point is that we are not there yet. Finally, what to expect from the authorities? Having explained all this, let me just give you a very short description of what authorities have said until now. Bitcoins have been recognized as private money in Germany in the middle of last year, and in Canada they were recognized as a barter exchange system, and economically I have a preference for the barter exchange system for now at least. Consumer protection issues have been voiced by the French Protection Authority, by the European Banking Authority, and so on. It has been hinted as illegal in Russia, not really declared illegal, but the prosecutor said that it might have raised legal issues. But in China and India, I believe transactions in bitcoins have been made illegal. Anyway, Western central banks' position, including the Federal Reserve and the European Central Bank, who have published actually studies on virtual currencies, show that central banks, Western central banks, have a big interest in the development of bitcoins. And this is quite understandable because we indeed see the appearance, the emergence of a new medium of exchange, the appearance of a new competitor, so to speak. So I believe this benign attitude will continue until the end of the experiment, because it will be indeed very interesting to know how this experiment will end. And central banks probably believe that they can learn something out of it. And there are two logical possible ends, two logically conceivable ends to bitcoins. They either become full-fledged monies, or they remain a speculative investment vehicle as they are nowadays. Now, if they become a speculative, if they stay basically a speculative investment vehicle, they will fall in the general, under the general legislation of transparency, anti-money laundering, consumer protection, not only the users, but the dealers, and so on. Now, what if they become money? Well, then, they will automatically fall under legal tender legislation. And that's the key issue, which, as far as I'm concerned, makes me very dubious that bitcoins will ever become full-fledged monies. What does this legal tender mean? Legal tender legal tender implies that nobody can refuse the money which is declared legal tender. And given the size of contemporary governments, which makes 50% of the GDP in some countries, it is highly unlikely that something else than the euros and dollars will ever be declared legal tender. And this makes it extremely difficult for any competing money, as long as there is a legal tender, to succeed in the project. Typically, legal tender legislation is being broken by consumers, by users of monies, when they see that the purchasing power of the money is declining very quickly. This is the case of hyperinflations once again. But even then, if you look at cases of hyperinflation in the history, governments typically do what is called a monetary reform, either through a currency board, either through change of the central authority. Somehow they reintroduce a new money, which is also fiat paper money. So I'm very skeptical that bitcoins could become ever full-fledged monies in the current environment. What I believe will come out from bitcoins are innovations in cryptology, which will somehow make much easier transactions, contingent transactions, intertemporal especially, which happen in the future, which have an element, one leg of the transaction happens in the future, and I want to put a condition under which this transaction occurs. This seems to be an area in which cryptology, the cryptology which is behind the bitcoins, has some promising future, but not the monetary element as far as economic theory can tell us. Thank you very much.